All eyes remain on the oil market as prices continue to slide, trading below $37 per barrel. And the International Monetary Fund recently predicted that the price of oil will slide to $20 in the coming year. I'm now being joined in the studio by a Senior Investment Officer at the Financial Derivatives Company Limited, Opeyemi Oguntade. Good afternoon, Opeyemi. Good to have you in the studio.
Good afternoon.
How are you today?
I'm fine. How are you?
I'm okay. Well, looking at the oil market, we have seen the price slide to as low as $36. And IMF has just predicted that the price would, of course, go down by $5 or $5 to $15, dollars. Now, what are the factors signaling this prediction?
Well, if you look at what happened in 2015 and looking at the average prices now, or rather the average prices in 2014 before we came to 2015, now the average price of oil ended up at about $53, $54 at the end of 2015. And if you look at prices now are currently at $36. Now, this in itself is a signal that prices are coming down, right? And in 2016, based on what we know is going to happen in 2016, the fact that Iran is going to come in, and Iran is not just coming in, they are coming in and they intend to offer discounts on their oil.
And also increase production?
And also increase production. As well as the OPEC members. OPEC is now indicated to us that they're going to be operating under an environment with no quota, so to speak. And then you're looking at the US as well. The US has lifted its export ban. So all this coming together, this is an indication that indeed all prices are going to go down significantly in 2016. But if you're looking at the demand side, I mean, the emerging markets, there's been no impetus whatsoever to lead us to believe that there's going to be a significant increase in demand. So all this together is what's driving the conclusion that all prices are going to go down as low as...
Sure, let's look at Nigeria, for instance. The country is projecting an oil production of 2.2 million barrels per day. That's for next year. Looking at the scenario, do you see Nigeria really meeting this target?
Nigeria meeting 2.2, it's difficult because, I mean, prior this year as well, our production target was actually 2.2 as well. But what we've seen is there's been a decline over the month in 2015. And if we're looking at what's happened so far in that segment of the economy, when we're looking at vandalism, we're looking at all majors having a force majeure because of vandalism, as well as the fact that you have the Niger Delta militants. It's not exactly, I do not believe 2.2 would be able, I don't believe that we'll be able to reach that target, because if you're looking at the general economic environment, as well as the fact that there's been some obstructions, as well as difficulties in production, so to speak, 2.2 might not be achievable.
Now, if we eventually meet up with this target of 2.2, what difference would it actually make in the international oil market?
I mean, since we're producing at 1.9 right now, if we reach 2.2, that's additional 300,000 barrels to the market. And obviously, that's an increase in supply. So 300,000 barrels per day additionally to what we currently have in the market. Current market supply is about 95 million barrels per day. And if you're adding another 300, I mean, it might as well be at 95.7. And then you have additional 300 and making it 96. So this is going to obviously increase pressure in the market and further lower prices if Nigeria should achieve that target of 2.2.
All right. Now, still talking about the drop in oil price, Nigeria pegged its oil benchmark at $38 per barrel. Now, if we have to see oil price, slide to as low as $20, it's at $36 now, how are we likely going to buffer the deficit?
Buffering the deficit, I guess the only option left of Nigeria is to go to the international market and borrow. So we have international borrowing to make up for the deficit of oil in terms of oil revenue. Because at $38 per barrel, $38, looking at what's currently happening and looking at what we expect to happen in 2016, isn't exactly a realistic benchmark. And so Nigeria would definitely have to go out there into the international market to borrow to make up for the deficit we have in our revenues.
Now, aside from borrowing, I mean, we're talking about commodities. Don't we have other commodities that Nigeria can actually look into in terms of diversifying?
Yes, we do have other commodities. I mean, we are also a major producer of cocoa as well. And if anything, cocoa has been the best performing commodity in 2015. Prices are currently at about 3,229 for a metric ton. So basically, if Nigeria wants to go into other commodities, like say cocoa or the solid minerals as well, those are options available. But in the short term, is it possible to expand the capacity of that segment to make up for revenue? That's highly unlikely. So at the end of the day, we have to end up with borrowing.
Okay, looking at the short-term and long-term perspective here, is it all gloomy really for the oil market, particularly now that fossil oil is being promoted?
Well, yes, it's definitely, I mean, at the end of the day, with the energy markets, you have your gainers, you have your losers, and you have those that are in the middle, right? So in terms of fossil fuel, obviously the oil producers are at, they're at a loss here, because that means there's going to be less demand for their products and people are moving on to renewable energy. But long term, we know that we've been making use of fossil fuel for a long time, right up until the 18th century. Started off with whale oil, the next thing we were able to find oil on land, and so there's been an evolution in the energy market. But is that going to happen anytime soon? Is the renewable energy going to erode the, let's call it dirty energy so quickly? That's going to take a while. At the end of the day, it takes a while before development in this segment have a material impact or they materialize significantly. But another thing to look at is the fact that oil prices are going down and you have your renewable energy. Now, oil prices, given the fact that oil prices are low, that means dirty energy is more likely to be cheaper than renewable energy. So at the end of the day, the dirty energy, so to speak, has an advantage in terms of prices. So before we see a significant impact, it's definitely going to take a while, unless we have, say, a rebound in oil prices and, it becomes more expensive than
just a quick one. You talked about the gainers and the losers. Now, who are the gainers and the losers at the global oil market?
Well, the gainers would definitely be those that are they're importers, the oil importers coming from the emerging markets. So we have India, we have China, we have Japan. Those that are oil importers are definitely going to be the ones benefiting. But aside from the oil importers, you also have those that are the oil refineries or the oil refiners. Singapore will be a perfect example of an oil refining country that would make money off this, because if you're looking at the profit margin between for your the cost of production and the amount at which you're selling your refined crude, there's a profit margin there, and that's good for all refineries. But on the loser side, you have your oil producers, OPEC, Nigeria.
All right, thank you very much, Opeyemi. It's been a wonderful conversation.
Thank you for having me.
And have a splendid new year.
You too.
So I hope to see you in the new year.
I'll definitely see you.
Thank you.
Thank you for having me.
All right. Well, I've been speaking with Opeyemi Oguntade, Senior Investment Officer at Financial Derivatives Company Limited. Let's take another break. When we return, I will be speaking to my colleague Temple Ashaju, who is presently at the Nigerian Stock Exchange, to tell us how the trading for the day went. Just stay with us. Welcome back. Let's bring in Temple Ashaju now to tell us what happened at the exchange. Hello, Temple.
Hello, Chimeze.
How are you? So it was quite unusual today. The market closed as early as 12 noon. Was it all about winding down for the year?
The exchange decided to close at 12 today as a result of the New Year celebration, which is a few hours from now. It is to allow brokers and dealers to go back home and fresh up and prepare for their celebration, which is in a few hours' time, like I said, and also to help them just look back at the year and re-strategize for next year, 2016.
Okay. Omotola Kehinde was at the exchange today. What did she say? It was an exciting day, I believe.
If I heard it clearly, I guess you're referring to Omotola Jalade Kehinde's visit to the stock market. Yes, she was around today, and she sounded the closing gong.
Yeah.
And her comment about the market is that her perception on stocks, equities, so to say, has changed. She didn't know much about it before, but now she is getting gradually knowledgeable about the stock market. She said that she's actually been buying stocks for some time because she has investments in stocks, although she refused to disclose which stocks she has in her portfolio. But as it is right now, she apparently has a good perception about the stock market as against what happened in 2008 that reduced the confidence of retail investors in the stock market. She also spoke about the possibility of the Nollywood industry tapping into the capital market, stock market precisely, and raising funds. She was amazed at the fact that there are no major Nollywood financiers or sponsors listed in the Nigerian stock market. She said that she is going to take it upon herself to perform that kind of ambassadorial task.
All right, that's interesting. What are the market expectations for the new year, Temple?
Okay, like you probably know, the market, first of all, ended on a positive note today. It sustains that gaining momentum, that surge that started yesterday by closing 3.11% uptick today. And of course, that settled the all-share index at 28,642.25 points, which is a new psychological line as against what happened yesterday. And some good companies that actually done well to help the market to that level. We saw 3 good companies that posted about 10%. As a matter of fact, NACO Avians did 10.20% in just one day, one session, which is really, really amazing. And then we had 10 companies that did about 5%, and in total, 33 companies were the gainers of the day, while we had just 6 companies as decliners. Now, what this tells us about 2016 is that next year may be good, may not be too good for equities because of the budget of the President Muhammadu Buhari. He has said that there will be so much borrowings from the capital market next year, looking at the foreign clients and as well as the domestic market. And of course, that's where a lot of brokers that I spoke to are more optimistic on the bonds market. They're hoping that the bonds market will pull more gains next year. However, because companies are closing their books this year, they're dotting their I's and crossing their T's. It is an opportunity for them to end the year on a positive note.
All right, thank you very much, Temple. Well, I choose to remain on the optimistic side, Temple. Thank you very much. Well, that was Temple Ashaju, Channels TV business reporter, talking to us from the Nigerian Stock Exchange. And that's it on today's edition of the program. And of course, the last for the year. Tomorrow is another day. See you there.